Our next panel is Unlocking Bitcoin DeFi with exSat. I'm joined by exSat's founder, Yves Larose, and actually I will be moderating this. So thank you. All right, thank you so much for joining us.
Oh, thank you very much for having me.
Excited for this discussion. So I want to jump right into exSat and kind of the structure of what you guys do. You call yourself a layer 1.5. Can you kind of break down why you decided to build in this in-between area and what that means?
Yeah, so I've been in this space for a very long time. I started mining Bitcoin in 2010, very early on. I was listening to the previous panel, and he was saying, at some point people were mining Bitcoin with their laptop. I was there at that time, and over the years I've seen this space grow, and I've seen the challenges, and I've seen kind of the cycles, and I've seen that pendulum swing from one use case to another, and the advent of smart contracts and such. And in the Bitcoin space, it feels like there's somewhat of a resurgence over the last year and a half or so of interest in scaling solutions. And so this is something that I wanted to be a part of, and it's something that I've been working on full time now for about 6 years, once I left traditional employment. And when we were looking at this, we wanted to look at it from a point of view of what we were seeing in the market. So we were seeing a lot of layer 2s come about. What were their challenges and how were they approaching on scaling Bitcoin? One of the things that we kept running into was this idea that essentially data availability is a big challenge on Bitcoin. It's extremely expensive to be able to put all of that UTXO data in a decentralized database that's queryable, that's accessible, but that economically makes sense. And so we really started off with this idea of how about we provide a DA layer, layer 0 type of thing. But at the same time, as we were going through this process, we kept hitting the wall of, but in order to be able to do that and for it to be economically feasible, essentially you would kind of need its own network, and that network could potentially provide layer 2 functions as well. And so we originally, the concept became kind of a hamburger layer. You hamburger layer 0 and layer 2, and obviously that's not as sexy as a name. And we started rolling around with this idea of a docking layer solution. So think of it just like a docking layer for your laptop. You build the base, and it really doesn't matter what that laptop is like, whether it's whichever company provides that laptop, however many ports it has, there are standards. And so we wanted to build around those standards, and we wanted to provide that data availability for other L2s in a way that would help them scale, help them offset their costs. Started going around as well with the incentivization for miners, for other validators, for custodians, and we came up with this idea of a 1.5. We kind of fit in between the layer 2, the layer 0. We're not trying to compete with layer 2s. We're actually trying to provide value services to them, being able to lower their costs, provide that data. But at the same time, that layer in itself can be used as a scaling solution. And that's really where the 1.5 came about.
Thank you. You almost answered my next question. I wanted to get into this data availability layer. You've already mentioned some of the challenges that come with mirroring the UTXO data. Can you kind of talk about what service this provides the network and why it's so important? And also, I know you work with a lot of miners to access that data. I'd love to hear about that.
So when we're designing this scaling solution, because I've been in this space for such a long time, I somewhat have a purist view of what a layer 2 should be. And there was 2 talks ago, actually, the gentleman that was speaking on stage from Rootstock kind of elaborated those, so I won't go into too many details. But that purist view really was at the core philosophy of what we wanted at the base when we were building something. And we were thinking about how could we potentially leverage the robustness of POW, but also the scalability and the flexibility of a POS type of solution because of all the success that Ethereum has had and other networks running on kind of POS scaling solutions. So we came up with this hybrid consensus model. And through that process, we're also thinking, well, if we want to make this data available, and it needs to be decentralized, and there are huge scalability considerations there. Just to put it in perspective, UTXO data right now, about 170 million blocks or so, up to height 840,000, is about 110, 108 gigs worth of data. If you want to make it queryable and you want to make it indexed. And so those are very real costs for infrastructure providers in the traditional POS space. So we're looking at different ways to be able to incentivize different players, part of our basically architecture of what we would ultimately end up building. And the core philosophies of Bitcoin kept coming about, this decentralized nature. And so in working with that UTXO data and kind of designing this system is really when we started looking at, okay, which kind of players, which type of stakeholders do we need? If we want to mirror this data, and the philosophy is we want it to be as close as possible to POW, recognizing it will not be, well, it needs the actual miners that have created this data in the first place, that created these blocks, to be the ones synchronizing the data to our network so that you close the gap. If it's the same people, if you don't trust the miners, and if you don't, in our case, we have about 60% of hash rate, and growing, our target is around 90%. If you don't trust the Bitcoin miners in Bitcoin, well, then you're screwed anyway. So we started off with that principle, started incentivizing them, finding ways of how they could be part of that system, but then looking at the very technical challenges of doing so as well. And that process essentially took over 8 months, but it's really the culmination of 6 years worth of work building off of previous projects and projects that are already out there.
Definitely. So I know we're at Permissionless, which sometimes can have more of a Ethereum crowd. I know we're on the Bitcoin stage. But I wanted to ask you about the decision to take the EVM approach. How did you come to that decision? What value does it bring? I'd love to hear.
So Bitcoin is awesome, but Ethereum is awesome. And I think they play very different roles in this overall blockchain ecosystem. And what Ethereum has done really good at has been to build an ecosystem of applications, of developers, of libraries, standards. If you're looking at DeFi, really DeFi is really run on Ethereum generally. The majority of all of the investments that have been made over the years in the application space really is dominated by Ethereum. And they've got this thing called EVM in order for people to be able to kind of have this base layer bridge that people can connect to, which creates this ecosystem. So we knew that we wanted to leverage that because that's really where the developers are. That's where a lot of the investments have been made in terms of code base, in terms of auditing, et cetera. Like there's such a rich repertoire there. And in terms of DeFi, in terms of actual activity, volume and such, it's really there. There are a few other chains as well, but Ethereum really stands on its own. And at the same time, though, Bitcoin is really where the liquidity is. That's where the capital is, by far. But a lot of this capital is kind of trapped. It doesn't have anything to do. Historically, for Bitcoiners, you buy Bitcoin, you hold Bitcoin, you maybe sell Bitcoin at some point. Don't sell Bitcoin. But the idea is you pretty much just hold Bitcoin. You don't do anything with it. And we're seeing in this last year and a half that people are looking at, and we saw that pendulum swing, where people are looking at wanting to do things with their Bitcoin. So we saw a lot of Bitcoin L2s come about, and we really wanted to bridge that gap. We're not trying to compete with Bitcoin. We're not trying to build on top of Bitcoin. We're really trying to build a bridge to be able to help scale. And EVM was just a natural choice for that because it really pairs, in my opinion, the liquidity, the robustness, kind of the core principles that created this industry, and where we see, very candidly as well, where the majority of the capital is coming in. If we're looking at the ETFs and just this previous panel now, all what that entails and what they're doing as an industry for Bitcoin in terms of pushing this industry forward, pair that with where the actual community is, where the people are, where the builders are. EVM is just a natural solution for that.
Yeah, definitely. I like that you brought up capital and the ETF, which has been a really exciting development for Bitcoin. I know there's definitely some cons to the package that it's presented in, but it's a real sign of institutional interest, which I'm curious to ask you about. How have you kind of seen the institutional landscape change? What value does exSat bring to institutional players?
So kind of going off of what you said, it's one of those double-edged swords, right? So in part, there's this ethos of not your keys, not your crypto, but a lot of people out there, their first exposure to Bitcoin will be through an ETF because it's easy, it's relatively safe, and it's attached to institutional players that they're comfortable with. And that obviously brings about some more interest in the space. It also legitimizes the space, right? So if we look at the large institutions that are now taking part in this, and even just with the Bitcoin ETF approval, how it's brought about more institutional players, as an industry, as a whole, crypto isn't looked down upon as much as it was before. For the longest time, crypto was looked at this dark web thing. It's only degens. It's used for drugs and weapons or whatever it may be. It was all negative. But over time, as you've seen more institutions come about, as more real players look at this as a future-facing technology, it's an agnostic piece of technology. The use cases obviously could be nefarious, but technology is just agnostic. As more people see that and attracts more institutions, what it does for the rest of us is it actually kind of brings about people that are interested in building on something, and they want to build it in a very public, regulated. They want to do right things. They want to do it properly. They do see business opportunities in building and or having kind of products within the space. So it attracts more builders, it attracts more capital and such. So I think overall, generally good. At the same time, it is kind of that double-edged sword because that underlying ethos was to move away from those large institutions in a way. And so, it's I think a delicate balance. Overall, I think it's still really good. I think it's awesome for the industry as a whole. How it applies to exSat is when we came about and we started talking to stakeholders, in the beginning, we really approached miners. We thought, like I said earlier, if we don't have enough hash power, this experiment fails. We're not able to close the gap of security that we're trying to close by leveraging the same stakeholders. And when we started approaching them, the big thing that they were going through at the time was the halving in this spring. And for them, they go through this cyclical nature of every 4 years, hash power goes up, it becomes extremely prohibitive to mine. Small miners have to close up shop, or they have to relay their hash power to larger miners, et cetera. And it's just kind of this game that's played every 4 years. And every time this happens, the largest miners are looking at how to attract more mining power to their pools. And this is really where we started with exSat, was a means to be able to help complement their potential revenue to attract more hash power to their pool. So we really started off with the institutions. That led then to the custodians, and it led to validators and such. But institutions for us, and the largest players for us, are really key to the underlying, I guess, design of our system. And in large part, what we wanted to do it as well was to make it decentralized in a way where it's a fair launch. So that anybody who participates in this is able to reap in the reward. So even in the tokenomics point of view and in the design point of view, having this, let's say, proof of work at the core of how we design the incentives was really key, and that was very, very attractive to institutions.
Yeah, definitely. As we kind of talk about the institutional landscape and institutional adoption, it's hard to talk about that without mentioning regulations, which I know are a really big concern for a lot of the institutional players, considering getting involved in this space. What can you tell me about how exSat is kind of approaching this uncertain regulatory environment?
So because I've been in this space for such a long time, and because I'm a public figure and I'm based in Canada, I never had the opportunity of not being myself, let's say, not being regulated, in the sense that I've always had to run above ground. And part of what I've tried to do is to move this entire industry forward within my own way to showcase that this industry can actually thrive within the current system that is not composed of people that are simply trying to run on the edges or operate outside of the law. That the majority of people are actually trying to operate within the law, but the big issue here is lack of regulation. And it's not that regulation is favorable or unfavorable, it's that it's uncertain. And when you have uncertain regulations, people will move to jurisdictions that either offer that certainty because it makes business operations more consistent. One of the things that I hear frequently is if you've got a choice between service offering that might be a little bit more expensive, but that is consistent and reliable in its cost, that is more favorable to something that is inconsistent and might sometimes be cheaper, but you never know, and so you can't plan. And this really applies to the way that we approach exSat as well. So we've set ourselves up in jurisdictions that are more favorable, that have regulations. We operate, myself in Canada, and so we operate within a very heavily regulated environment within Canada as well, whether it be in the financial space, whether it be in mining space. Canada is heavily regulated, and so we always try to do things in a way that will be inherently more difficult at first, because when there is somebody that gets dinged, or when whatever it may be, a player, whether they on a political level, financial level, whenever they're they want to reach out to somebody, they'll go to the nails obviously that are known and that stick out first. But in the long term, though, in my opinion, those are the players that are going to survive, because they are trying to move this industry forward. They are the ones that are reporting. They're the ones that are trying to operate above ground. That's always been very important to us, and so that's why it's also very important to us to do partnerships with other players like us, like-minded players that are operating above ground, that are well-known players, because that ultimately brings about trust to the end user. When you've got these players that are well-known, that people can rely upon because they've got a track record, like the previous people on stage, it just gives confidence to the end user, and then that ultimately then brings about a better product.
Yeah, definitely. I think a lot of people are hoping for more regulatory clarity soon. I maybe wouldn't hold your breath, but hopefully we will see some of that potentially after the election in the US, which we obviously know is coming up soon. We only have a couple minutes left. Your team told me that you have a lot of numbers and data that I think could be interesting. I mean, you're uniquely positioned in that you deal with the miners and custodians and exchanges. Can you give us any fun numbers? I want some stats.
Sure. I mean, like I said earlier, UTXO data is a little over 170 million blocks. That's about 108 gigs worth of data that is currently that has been indexed in RAM, so physical RAM. Another number, so all of the validators on the network through that launch phase, basically the first, I call it a soft launch, but we're launching on October 23rd. And for that first period of time, because it's a fair launch, so there are no exSat tokens, they will start coming into existence after that date. There are no exSat staking requirements at that time. So there's about a 6-month period where people will be able to accumulate, mine exSat, the validators and the synchronizers, but there won't be any exSat staking requirements to be a validator. During that period of time, there's credit staking in terms of Bitcoin staking. So the validators must put up 100 Bitcoin each in order to be, meet the requirements to be a validator. So at minimum, we're launching the network with 2,100 Bitcoins. What I can say, though, is that we do have well over that. We have around 5,000 Bitcoins that are currently lined up to stake. And outside of that, we also have one of our partners that announced recently, about 2 weeks ago, Matrix Port, so Cactus Custody, that they will be deploying on chain between 5,000 to 10,000 NBTC on chain. So at launch, we should have, depending on the Bitcoin price, between, let's say, $200 to $500 million of TVL just to start off with, and that's inevitably going to grow over time. So that's quite interesting, I think, as a number. When we look at that, when we compare it to the other, I guess, current scaling solutions, it's really high up there. So there's definitely interest from the largest players. So we've got, in terms of mining pool, F2 pool, Ant pool, Via BTC, Spider pool. We'd love to talk to Mara and to Foundry. We also have, in terms of, I guess, exchanges, BitGet, OKX right now, and talks with custodian, launch partners, custodians, Cefu, Kobo, Matrix Port, like I mentioned, Cactus Custody. So these are all really recognizable names. And because it's a fair launch, even us as the exSat Foundation, we're going to need to run our own nodes to be able to mine exSat. So we're not special. We don't get any other tokens than anybody else. So the way that this is built really incentivizes all those partners to try and create value on this network, because everybody's equal fundamentally. And I guess, yeah, that's really exciting for me.
Great. Really quickly, we just have a minute left. What message do you want to leave the audience with about exSat? How can they get involved? Where can they find more of you?
So if you're interested in Bitcoin scaling solutions, if you are a Bitcoin L2, for example, and you're looking for the access to decentralized UTXO database that you're going to be able to query and actually, read and write, this is a cost that we can offset for you, and so please reach out. If you're an application builder and you're on Ethereum right now and you're looking to maybe access more liquidity, some of that Bitcoin liquidity, and you want to access a greater user base, grow your user base, please reach out. If you're a miner and you want to contribute to synchronizing UTXO data, and get rewarded for that for a very minimal incremental cost on your side because the infrastructure, the light client is very easy. Please reach out. As I said, our goal is to reach 90% hash rate. We're currently around the 60, 62%. If you're a validator, if you're a custodian, if you have access to Bitcoin and you essentially want to participate in this as a validator, please reach out because we still have validator spots. Essentially, we'll have up to 99 spots. And we're about 40, 50 right now. So wherever you are, if you believe that Bitcoin scaling is of interest to you and you think that it's valuable for the industry, please reach out. There's myself, there's a few people as well with me here, and we'll gladly talk your ear off about exSat.
Great, thank you so much, and thank you for joining us.
Thank you, Casey.